Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Monday, February 5th. We're going to take a look at Palantir today. So with earnings coming up, I thought we would take a look and see where some support and resistance levels might take effect based on, the response to earnings, whether it's a big boom, whether it's a big rug pull, or it can go sideways. Don't forget, this puppy could just keep trucking sideways. It's done it for a long time in previous periods, and it doesn't have to either plummet or profit. So I guess, the one thing that does stand out, this isn't to say that I think it's going to bust or boom, but there is this yet to be completely filled gap you see between this purple line here and this purple line here. Now this purple line to the downside isn't exactly where the gap fill would be. The gap would fill at about 1496, and this is just a near-in support level that we already had on the chart at 1505, so they're a little too close in to put both of them there. But it filled it down to 1566 here, so still a bit of a ways to go if it is going to fill it. So that's one thing that I'm looking at. If there is an outsized downward reaction to Palantir's earnings, and then if it does, decide to boom, there's plenty of room for it to go. I mean, these levels we've had on the chart for a while. If we're to get back through this 1696, so basically that approach to the psychological $17 level, if it's able to overcome that, then we have a level here at 1721. And then we sort of have, some relatively smooth cruising to 18. There is a level in here somewhere, probably around probably just above 1750. So 1755, 1757, something like that. So another sort of psychological. Sometimes these psychological levels appear on the approach, like 1696, right? Like the approach to 17. And sometimes, based on the chart, they look like they're just over the psychological level. So that psychological level of 1750, it looks more to me like it could break through it, and then I guess the market would sort of have the question of, are we really going to stay above 1750? And so it might hit the resistance a bit above that, at least based on the previous price action as I see it. But plenty of room to go. Even if it gets through 18, we have 1919, 2001, 2121, and 2310 on the chart. But yeah, we have huge range. We have 1505, or basically, what would we say, 1496 on this gap fill, all the way up to 2310 on the chart. So huge range there percentage-wise, and several stops in between, many of them at or very close to the psychological levels. This 1919 is kind of an outlier, as is the 2121, but otherwise you have like 20 bucks, 18, a bit over 17, a bit under 17, and then, it's been moving sideways for a while, mostly between the 16 and $18 level, spending the bulk of that even then between the 16 and 17. So like I said, it could continue to just move relatively sideways. We zoom out a bit, we do see this big push up right here. Was the last period where it was in a pretty big range percentage-wise, but it was, if you zoom out enough, it was sideways. But, it had come down from some big highs, and then consolidated there, and then it's had a big push. Now, push up to 2185 is certainly not a push up to 45, or even over here to almost 30. So the question I have at the moment is, relative to 45, and then draw down to 30, and then draw all the way down here into the sixes, down here into the fives, and then pushing up into the low 20s, or sort of breaching 20, and now pulling back to 16, where does that kind of leave it? It sort of feels a bit to me like it leaves it in the mid-range. It leaves it in a place where maybe the market can have what would feel like an accurate reaction to earnings. So if it's a really positive call, we get some upside. If it's a really negative call, or if it's a somewhat negative call, we get some downside. And if it's just sort of on par, maybe we get slightly in one direction, but maybe fairly sideways. Now, I don't know if that will be the case. The other question to bring into it is like the market cap, right? Do folks still feel like even at the the sheer price point of 1660 or so, is the market cap just too high. And even if we have a good report come in, is going to be seeing, the multiple here is too crazy. And so could it be a situation where it's on par or it's even pretty positive, but you even get a drawdown because folks are just sort of like, you know what, up here, market cap is just too high, can't sustain it. So, to me, it's a little bit tough of a call, and that's why I thought, ahead of it, I would at least come in and say these are the levels as I see them. If it moves through these, I'd expect it to catch resistance in these areas. I'd expect it to catch support in these areas, and maybe retest along the way, and just sort of see what happens. But in terms of how the market's going to react to either an on par, a positive, or a negative earnings call is a little bit hard to say based on the wild swings and where Palantir is sitting relative to its very volatile and storied past. Now, on the think or swim side of things, we have trigger and fire back here that set off some fireworks, a really big move up and down, and then ultimately up, and it spent that as it retraced a bunch of those gains, and now it's been pinned to the mid-range of the channel, more or less, slightly below, slightly above, but it started triggering again. So we're getting a trigger going into earnings. This trigger and fire was a bit ahead of earnings last time, and so this time we'll see what's going to happen as it's triggering at the moment that it's heading into earnings. Always an interesting setup, not only that the earnings is happening, but it just purely that it's at the mid-range of the channel, and it's appearing to sort of go through a double die down on the bearish momentum. It took sort of 2 swivels on that to make it happen per the histogram. So we'll see. It doesn't mean that it has to turn bullish. It could certainly, zoom back downward if it wants to, but we'll see if this trigger results in a fire on the TTM squeeze indicator that actually puts out a big move or not. But it would seem that the catalysts are there if it wants to happen. All right, folks, I hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.